When it comes to investing in different securities, it helps to have a strategy. The same would be true, we've got the Boxing Day test on right now. When you're in any sort of sports team, you want to have a strategy as how you bat, potentially how you drive down the fairway. And when it comes to the listings on the ASX, there are so many, across so many different types of category, so many different types of sectors on the ASX, that it's worth knowing exactly what you're looking for. We work with clients to help share our investment strategy, and that's got 4 stages of evidence behind giving that general advice. The first strand is a top-down approach looking at macro data points. These happen all throughout the year and they help influence whether any one particular sector is potentially going to have a good or a rocky period. This could come from central policy decision making, this could come from unemployment data, this could come from currencies, it might even come from geopolitical tensions or trade disputes. Once you have the data from a macro perspective, and these happen, like I say, every single week there's something that could move the market, it's worth then looking within the sector. And this is where fundamental analysis is potentially useful evidence. The past is no indication of the future, but it sometimes doesn't hurt to look at a business that has a good listing history of allocating capital well. No one metric is perfect, but we like to look for businesses that have a sensible amount of debt, that have a good return on equity, businesses that are able to grow their revenues, ultimately have good cash flow, and we're also looking at a business that has a strong margin and is able to hopefully pay a higher dividend over time. The third strand of evidence is valuations. There are different methodologies of trying to value a business, and it's an inherently complicated task. But one thing we think is very powerful is to look at the major institutions, what are their broker calls, and how are they viewing the stock in terms of whether it's going to outperform, be neutral, or underperform the broader index. If you, for example, have consensus that the major institutions feel that this stock is undervalued, that's quite interesting, and that evidence can be further incorporated into our general advice and coming to some sort of conclusion. The final stage is to use technical indicators using concepts such as moving averages and Bollinger Bands to look for a potential entry point. Whether or not you believe that every stock has support or whether or not you believe it has resistance, enough people in the market believe in it that it's worth analyzing. And it's always useful to consider at what point you feel the stock could move in the short, medium and long term. Once you've got those 4 strands, the macro, the fundamentals, a valuation metric, and also the technical indicators, mathematical averages, you can potentially form an evidence-based approach as to whether a stock is under or overvalued. And that can then be cascaded across through reports, daily announcements, and ultimately in our communicative discussions over the telephone, in meetings or conferences, so that you as an investor can have more clarity about each individual listing that you're looking at and whether or not they could be worthy of allocating some capital of yours towards.